Hey guys, welcome back to Sharks Academy, and in today's video, I'm going to go through with you the weekly market analysis for next week. So let's start off with euro dollar. First of all, we have a bearish market structure over here. So this entire framework, bearish. And then over here, look at this. Prices starts to deliver bullishly, but all of these are internal structure, right? So we have this as our internal structure, then we realign to bearish. So this is a bearish framework now. So now this is the realignment on the daily time frame. We sweep liquidity, we broke this level, and now looking to sell. So where are we selling from? So now if prices breaks this level over here, we are looking to sell. And we are going to sell high. We're going to sell perhaps over here. This is the best price to sell on the daily time frame. But on the lower time frame, if you are playing on the 15, looking to grab this liquidity, then you want to play the 15M or the 1 hour or the 4 hours. So let's just do that. Let's go down to the lower time frame. So you can see clearly we are going to be bearish and we do not expect a huge pullback from here. Right? We are going to continue this bearish movement into this liquidity pool. Right? Okay, so now how do we catch a continuation from here? So now looking at the latest move, can you see that we actually took out highs over here? We broke lower on the 1 hour, right? And now we tag into a POI. So what POI is this? Let's go lower again. And clearly on the 15M, we have this movement. All right. So we mitigate some sort of supply inside of this wick on the 15M. We took liquidity, we broke down. We tag into supply. So now over here, we can expect a move downside. But really on the 15M, we need to see a breakdown of this area. Because yes, prices took out this high, we expect this to break down. Then this move should continue lower to grab this, right? And if it breaks this level, then we can trade the pullback to continue going lower. So now, if you are to play it on the lower time frames over here, right? Since prices taps into this supply, you have two ways to get involved for euro dollar. One, you go down to the 1 minute time frame and trade into the supply, the demand inside of this 15M swing. Second, you wait for the 15M swing to be broken. So you wait for a move, as mentioned previously, to break down and trade the POI, which potentially going to bring you lower, right? So now let's go down to the 1 minute time frame. So when prices taps into this level, you are not interested to be a seller, right? You're only interested to be a seller, perhaps over here. Okay? So over here is where you really want to become a seller. Here, possible. You can use the change of character here because we took out highs, we took out lows. So if you are someone who is interested in trading this, then go ahead. Right? When prices taps into this change character, this could have been your entry. And what is so good about this entry? It sweep liquidity, it mitigate POI. Okay, you can place a sell limit assuming this is an inducement level, or you can play the 5 seconds confirmation inside of here. And prices starts to deliver lower. Okay. So all of this again could be said as internal structure, right? All of this mapping is internal structure. Yeah. Sorry. Alright, until it broke this level. Okay, because this is just a change of character. This is the first potential swing that I see, right? That took out lows. So this is protected. Took out these lows, right? And now currently broke structure here. The 1M. So when prices broke this level, we are ready to go short. But from which POI? Because we have so many POIs to work with. We have this as our POI as well. We use the entire. This is a POI. And of course, we could potentially look for something here as well. Right? So many POIs. Which one do we use? Look for sweep mitigation breakdown. The last push came from this level. We sweep, we mitigate, we broke. This is your entry. Okay, and you could have gotten some movement inside here on the 5 seconds. I do not have the 5 seconds now. And this move could have gotten you, let's see, right? Euro dollar usually give you about 2 points, so maybe 1 pip. And then you are targeting this low first as your take profit. This is 1:2.7, and perhaps aiming for demand areas like this. So now what does this demand, or what should this demand do for you? If prices were to tap in, right, and then make a higher high, then this is going to be bullish for this movement, right? If prices taps in, fail to create high, starts to break down, then this demand failed, and this area over here becomes flip zone. This could be your potential flip. This could have been your potential flip. We need to see what happens over here. Okay, so for the euro dollar projection, again, we are looking to take a lower time frame sell into this liquidity pool. Unless you are working on the 15M. If you're working on the 15M solely, then you want to see this breakdown. Then trade a pullback into any of these POI to continue lower into this liquidity pool. So next up, we have the Aussie dollar, and you can see clearly again, we broke this level and we broke this level. So this high sweep liquidity here, we have a buy sweep, we broke down, we tap into supply. So now this supply zone, there are two ways you can catch this. Again, if you're a 15M trader, you perhaps want to see a run of this liquidity, right? And then this low, you want to see it being taken out. So you want to see this push up, you want to see this break of the 15M, then the pullback, and this is very clean. Okay, so if this happens, you can take the sells. All right, so we sweep, we wait for a break of structure, we wait for the pullback into this to catch sells. So for 1M traders, this is where you can actually use the lower time frame, move out to the 1 minute, look for a shift, and take it lower. All right, this is one of the ways you can do it as well. Otherwise, you can immediately get involved on the 1 minute time frame over here. So let's go and see whether there's any 1 minute framework you can trade with. So now, change of character happens here, right? Here, here. So where is the break of structure for me? This level over here. This is the break. Okay, so in this case, this huge move over here is the break, right? So now prices starts to do this, break down, pull back, perhaps no involvement over here. So I'm waiting for prices to tag into potentially this supply. This buy to sell over here. Okay, so you can see it wicked out a few times. Fine. Right, where's our stop loss? Above this high. Why above this high? Because this is the protected high, right? This high took out liquidity, broke down, and then taps into a supply. So now there's two ways you can do this. When prices taps into this level, you can look to confirm this area. So what do you see over here? When prices taps in, where is the low? Here. Did it ever breach the low? No, right? So now prices wicks out again. Can you see that your supply is taken out? Okay, so let's repeat this entire framework. Prices smashes your supply immediately. For some traders, this is not valid anymore. The moment you wicks out your supply, they are not interested to trade. Okay, but for those traders who are interested to use supply zones that are potentially wicked out, then this is the high, the low, the high. And then all of these are just internal movement. We see a push up. This high took out liquidity. Okay, I think it took out liquidity, right? Yep. And then breakdown. Yeah. Okay, so again, depends on you. If you're using body breaks, then this is not valid. If you're using wick breaks, then this is valid. And then potentially you have gotten caught here, right? This, you have a sell over here, potentially losing money if you place your stop loss above the high here, right? If this is the supply, you confirm this area, your stop loss will be here. This would have taken you out. And what did it do? It took out highs again. Yeah. Took out highs, got lower here. Supply zone maybe inside of here, small one. Buy to sell wick, or the entire movement here. So any of these POIs are valid for prices to potentially go lower. So where is our target? This is our target. Alright, we are working with the lower time frame, potentially taking out this framework over here. So now 15M, definitely bearish, right? Overall structure bearish. Current movement bearish. Okay, so if you are not confident, then wait for the push up, liquidate all of this, breakdown, pullback. This is way cleaner on the 15M. So next up for Euro Pound, where are we in the market? We broke highs, pullback, broke highs, pullback. We are at the extreme of the 4 hours Euro Pound run area here. So now prices tags in perfectly. There are two ways you can do about this again. Right, you understand that this is a bearish framework. Okay, we took out liquidity, we broke lower here. So potentially sellers can come in from this entire supply area. So if you're to use the 15M to buy into this supply, it's valid, right? Use the 15M, buy into this supply, and then look for clues whether this is going to bring prices lower. That's the first way to get involved. The second way is to use the H4 realignment, right? Because now currently H4 is bearish, but this entire movement bullish. So you want to wait for this to become bullish on the H4, right? So you want to see this perhaps reaction, breakout. So once this happens, you have a bullish framework here that is in line with this bullish framework. So now you're aligned. So how can you get involved on the H4? This flip zone, potentially, and the extreme here. Both of these are valid prices to go higher. So if you are a H4 trader, this could have been your limit order. If you are a 15M trader, you're going to look for the 15M shift inside here, right? The 15M shift, the 15M shift. If you are a 1M trader, you're going to look for a 15M shift, then a 1M shift as much as possible, okay? Unless you have tested it out yourself, you understand that you can use M1 into a H4 structure, then go ahead. Over here, we have the Euro Yen. So we tap into a demand. Can you see? This is a demand. And we failed to break this high. So the deciding factor should be this high. Prices starts to deliver bearishly here. And now didn't breach this level. So all of these are just sideways movement. We either expect prices to breach this level, break up, pull back, get involved. Otherwise, we expect prices to move higher from here, break this level, then trade the pullback on the H4. So let's say this scenario happens, right? We broke the highs here, and then we have a demand here. This we could have gotten involved. If prices makes the other way around, right? We took out low first, then we break out. This is the high that created the low. So I want to see this level breached. Once this gets broken, trade the demand here. You can trade the flip here as well. So let's say prices taps into a supply here, pull back, breakout. This can be your PY as well. So all of this will be your POI. Same thing, always. Right? So you can aim for this high, high, or this supply. So why this supply? Because this supply took out highs, broke lower. So we can expect some reaction from here. We are not sure whether this supply it will be the one that is going to bring prices lower. And that's why if I get involved here, this would be one of my target. So over here we have the pound dollar. We recently took out this low, but this is a wick break. Okay, so for body breaks, it will be a clear indication that prices broke level. But if we see a wick break, then we see a change of character here. This is a sign that tells us prices may want to head up from here because we failed to close lower. We change character here. Okay, and then this is where all of this could be used as liquidity pools. Until this area, potentially, we do not know, right? So we have to trade what we see. We can still be a seller here, right? Because this high over here took out liquidity, mitigate the wick over here, broke this level. And that is why we can expect some sort of reaction here. This reaction could be the one that is going to push prices lower. We do not know yet. Okay, so if prices taps into this, starts to distribute, go lower, then this demand may not look like it's going to hold, right? Because we saw some sort of distribution here. It starts to deliver very short flow here, right? And we have been mitigating sweep liquidity breakdown. Mitigation, sweep liquidity breakdown. This will continue to deliver lower until we see a break. When this happens, this supply failed to break lower, and therefore this change of character over here should run the highs. And when this happens, we can expect a move all the way to the extreme. Highly likely, right? All of this will be used as liquidity pools into this supply. So for the New Zealand dollar, what are we looking at? So we broke this area here, we broke this area here, right? And now we broke towards the upside. So are we a buyer or a seller? You can ask yourself. We can either be a seller here, right? These are the areas that you want to sell from. And if I want to be a buyer, I want to buy over here. Okay, because prices are bearish here and turn bullish. So this could have been a POI to push prices higher if it wants to. Okay. So the problem with this is when it tags into this supply, can you see we change into a bearish movement? We have high, low, high, low, high, broke down. So now based on this immediate movement, we are definitely going to move into this demand. So let's play the lower time frame. So now on the 4 hours time frame, we took out. Remember, we track out the movements. We have the high, low, high, low, high. We broke down. We have two areas to look for sells. One, we want to sell at the extreme. This is the best area you can sell from. Second, you can look for the wick here on the H4. Okay, so these are the two areas that I really want to sell from. So if prices were to pull back now, give me some sort of a 50 change of character here, I can take sells. And similarly for here. Okay, and we're going to sell into this low over here. Alright, assuming this is the lowest point, we are going to sell into this level. We can actually extend our target to this demand because we expect demand or buyers to come in from this level. So we can expect some sort of reaction. So now the thing is about this is if we see a change of character here on the H4, let's say we see this, let me see a breakout, right? This is the indication that tells us this supply fails to create low, and therefore we can turn into a bullish one. Yeah, to continue going higher, breaking this level. Okay, and this move is going to be a move into this supply because we understand the fact that this can still be the movement that breaks lower. Alright, so if you track the movement, we are bearish. You see, you use the larger swings and you understand the fact that we are still bearish overall, right? And this can be a markup into a supply movement over here to go lower. The entire framework for UCAT is just sideways over here, right? So unless one side breaks, we have no true indication on where prices wants to go. So if you were to play the lower time frame, we could. So first of all, this is a demand, taps in, valid, right? We sweep here. So we sweep this area and we change character here. Can you see? Daily time frame, low, high, low, high. So at this point of time, this is a bullish framework. Yep. We can go ahead and trade this. How do we do that? Let's go down to the 4 hours. Okay, we can use the 4 hours demand here. So what is so good about this demand? This demand is beneath a POI. Can you see this demand is beneath this swing low? Right, not a swing low, sorry, this is just a low, right, and will be used as inducement as much as possible. Otherwise, you can still understand that this is a potential demand as well, because we do not assume that it's going to be an inducement, right? We're going to see what prices or how prices are being delivered to us, because truly this is valid, and this came from a flip. So prices broke down, taps in, failed to create low, breakout. So this is a flip, this is valid for me. So now, how can we trade this? We took out lows, we took out highs. I'll be waiting for a 15M to shift for me to take prices higher, and similarly over here, take prices higher. This is my entry model for dollar Canadian. So again, dollar CHF, not the cleanest, but if you were to trade this current framework, where is our liquidity pool? Here and here, right? We are trying to buy into these levels. The prices taps into demand, they are valid for buys. Okay, so let's go down to the lower time frame. So on the 4 hours, we took out low. We have a change of character here. So perhaps traders will have gotten involved right here. Okay, so this is the first. We have another one like this. Over here, we have an unmitigated area like this. Okay, so now can you see prices are actually tapping into this supply here? Maybe on the lower time frame, 1 hour, we have this supply. So play around. Okay, we have a 2 hour supply zone here. Prices taps in. So if we see a movement like this, we see a breakdown. So now the question you want to ask yourself, is this demand still valid to go for buys? We could, right? But we need to see a realignment here because prices broke this level. Can you imagine this framework here? This is bearish, right? We have a high, taking out liquidity here. We broke lower. We can expect some sort of selling over here. So if we broke structure here, and starts to deliver bearishly, we can't place a buy limit like this because we do not know whether this is a bearish reversal or is this a pullback. So what you want to see? You want to see an alignment. You want to see this supply fail to create low. And therefore, we're going to see a breakout, then a pullback, and continue to go higher. So this is the indication over here. This indication tells us that prices may want to go higher because this supply failed to create low. Okay, and when that happens, when this demand starts to shift, right, when prices starts to shift on this demand, prices could potentially run higher into our ultimate target, which is this level. So to add on to this USD CHF and some of the other pairs that I talked about, right, you have to use a high time frame to validate this failure to create low, because you can't expect prices to come back down here. And then when you see a 1M break of structure, and then you say that, okay, well, this supply failed to create low, right? Because this is a 1M break of structure. Okay, let's say you're going down to the 4 hours, all right, and then you see a 4 hours break of structure. This is a strong indication that tells you prices wants to move off from here. All right, so a 1 minute change or a break of structure doesn't tell you a lot of things. Okay, and even a 15M change of character doesn't tell you a lot of things. You can use a 15M boss over here, and then this may be a decent indication that tells you prices wants to go higher from here. So it all depends on the relevance of your time frame. When you're working with a larger structure, you want to use a higher time frame structure to tell you that prices wants to move off or continue lower. You don't want to use a weekly time frame and then go down to the 1 minute time frame and give you some sort of indication, right? It doesn't work that way. So now dollar yen, how can we trade this? We broke the highs, we tap into demand here. Okay, and we have a slow climb towards the upside. Can you see this over here, price action? Right? So do we have to wait for a breakout and pull back to get into buys? Of course, right? As much as possible, you're trying to buy near the highs. You do not want to do that. You want to wait for prices to come back to this level as much as possible after breaking this high. Remember, we have to wait for prices to break this high. If prices comes back from here, then this demand isn't so good. Why? Because this push didn't create new highs, and therefore this movement over here failed to create new highs and should go lower. Okay, so now we can be a seller, right? If we see a breakdown here, this is the indication that tells us prices failed to create high. Okay, so can prices potentially come back here before going higher? It could, right? We can still see this movement because we do not know whether it failed to create high until it creates the high. So what we can do is we can trade this breakdown pullback into this level or into this level. Both are valid. Okay, so we're going to see some sort of an indication over here. You can see prices took out this high. If we see a break over here, we can trade the bearish movement, assuming the fact that this failed to create high. This is one of the tick. Okay, so I'm leaning towards a seller here. Right, I'm leaning towards to be a seller. So now another indication you can do is if this demand fails to hold. Because if we want to follow the movement, this is the high. This demand should create new high. If this demand fails, we can trade the flip, right? Taps in, pullback, breakdown. This is the flip. This could have been your entry for sells to go lower.